This is the Net Group Investments podcast, where we explore a variety of views and insights that investors care about.
Rashad, so the last time you joined us recently, we spoke about the impact of US government spending on asset prices. We discussed a bit about the Fed's funds rate and where that's expected to go from here. And then you kindly shared your thoughts on the US elections and potentially Trump coming in and how the economy in the US could, potentially, what trajectory it's going to go in the near future. For today, I wanted to focus on South Africa specifically and a bit on gold to end off. But what do you think about South Africa's debt to GDP ratio and how the country and government can stabilize it? So, just in terms of what's your current view, what measures could potentially be taken to stabilize the debt to GDP ratio, and, how do you think this will affect the broader South African economy?
Hi, Anil. Yeah, debt has been an issue which has been on our radar for a long period of time. So if you look at the growth of the debt to GDP ratio from around the 30% level to 75% over the last decade, it's been a very troubling development. And there's two key drivers of that. Firstly, we've had an inability to grow over the last decade. Our growth has averaged sub 1%, which for an emerging market is a pathetic number. And I think any country in the world will struggle to balance its budget if it's basically getting almost zero growth. The other issue has been the constant bailout of SOEs due to their mismanagement. So you've constantly had to transfer money across to the Eskom, Transnet, SAA, Post Office. There's just been this constant drain on the fiscus, and that money is not necessarily going to develop the economy. It's basically going down the drain. So I think we need to fix those two things. And with the recent political developments, the formation of a government of national unity, I think we've got a shot of doing that. So confidence has increased. The electricity situation is beginning to be sorted out. You're seeing some positive developments which can help get growth up to that 2 to 3% level, which will be a more sustainable path in terms of balancing the budget. We don't have to have growth levels of 6 or 7% like China had in order to have a sustainable fiscal framework, but we can't be sub 1%. We have to get to a 2 to 3% level, and that will help stabilize the debt, and we can build from there.
Yeah, I fully agree, Rashad. And I guess just turning to valuations now, being an investor, it's something that's very important for you. But specifically, if you look at South African equities and bonds, how would you say that valuations compare to historical averages? What would you say is driving the current valuations? And would you say there's specific sectors or asset classes in South Africa specifically that present good investment opportunities right now?
So the positive political developments over the last month have led to an increase in asset prices. We've seen a bounce in the equity market. We've seen bond yields come down about 150 basis points. And from assets being at very cheap levels, they're now more moderately priced. And the positive political developments has given us an opportunity to reduce the risk premium that we use on the equity and the bond market. So while we have seen a strong rally, asset prices, equities and bonds are still cheaper than they have been historically. But we think that's reasonable. We don't necessarily believe until we see continued evidence of structural reform and more positive growth developments that valuations must get back to those historical levels. We think that bonds and equities are more fairly valued, and we're looking to see more evidence of positive economic and political developments in order to potentially reduce our risk premium further.
Rashad, and just finally, dynamics in global gold markets. What would you say are some of the current trends and dynamics that you're seeing at the moment? And what geopolitical and economic factors are currently influencing gold prices?
So we've talked about gold before, and we do believe that it's an important part of a multi-asset portfolio given its ability to hedge against crises, hedge against downside risk, and protect against inflation in the longer term. And our 5% gold allocation is important in its ability to do that over the long term. And we're quite excited about the prospects of performance of gold over the next year. So you've seen a strong performance over the last year, despite the fact that interest rates have been high and investors have been selling in general. So if you look at global ETF holdings, which is effectively how investors get their allocation to gold, that has been coming down across all markets, including the US, which were investors are big holders, Europe, the UK. They've been selling down their gold in the context of a higher interest rate environment. However, this has been more than offset by central banks accumulating gold, private investors accumulating gold as they look to diversify out of the global reserve currency, which is the US dollar. So geopolitics over the last year has played a big role in the rise in the gold price. And now that we're moving into a rate cutting cycle that we've talked about, I think that's going to be the next leg of the gold rally, lower rates, which has historically been a strong boost for the gold price.
Great. Thanks very much, Rashad. Thank you for sharing your insights on these important topics. It's been a pleasure having you join us today.
Thanks, Anil.
Thanks for listening in. That was Rashad Tayyab, Multi-Council Portfolio Manager of the Net Group Investments Stable Fund. Have a nice day.
Net Group Collective Investments is an authorised collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Net Group Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit netgroupinvestments.co.za. Net Group Investments. See money differently.